I'm joined by Gary Heminger, CEO of Marathon Petroleum. Nice to see you here at CERA Week.
Thank you for having me, Rhonda.
It's a fascinating time for your industry. You have benefited from lower oil prices. How much benefit are you seeing right now?
Well, I believe the industry, if you go back to the fourth quarter, and I believe we spoke early in the fourth quarter, but if you go back to that quarter and the early part of this quarter, as feedstock costs come down, it certainly should be a benefit to the industry. What we're also seeing is that crude imports are continuing to be robust. I think there's a lot of crude, especially in the medium range of crudes that are coming into the U.S. Gulf Coast, which is really helping the yield in the refineries. And I would expect that the industry will see a decent first quarter.
I know that you've said for this year a priority is to enhance margins in the refining operations. Aren't those lower prices essentially doing that for you? What else are you trying to do in terms of margin enhancement?
Well, you're right. Lower feedstock costs do help margins, but we know that's going to be very short-lived, and that's something you don't plan capital investment on for the long term. But to enhance margins, a couple things. Setting up your refineries to be able to run more of the light sweet crude that is available, even the condensate. And I want to be specific here when I talk about light sweet crude. I'm not talking about condensate of 50-degree gravity and above. I'm speaking to 40 to 42 gravity type crudes in the light sweet category. The second thing is the refined product exports. That is continuing to be very strong for the entire refining industry. We're up nearly to around 3 million barrels a day of gross exports. And if you really divide that out and consider a 200,000 barrel a day refinery, a large refinery, we're exporting the equivalent of 15 refineries into the world market today. So both of those things are important, increasing our ultra-low sulfur diesel throughput. And lastly, we finished our first splitter in Canton, Ohio, and the next splitter in Catlettsburg, both using Utica and Marcellus feedstocks, will be very beneficial to us going into the latter part of the year.
You have three parts of your business, really. There's also a retail component. Of course, you have the big Speedway Hess deal. What are you seeing in terms of retail demand? What are your expectations for the summer? Traditionally, it's always the busy driving season.
Well, that's a great question, and unfortunately, I can't share with you the retail demand because of until we release our earnings next week. But I'll say, typically, you'll see consumers, they lag a bit because they need to have the confidence that the market and the retail gasoline prices are going to be at this level for some time. I will say, though, if you look at auto sales, and specifically SUV and light trucks, those sales are continuing to climb and climb dramatically. So I believe that bodes well for gasoline demand going into the future. Now, diesel demand continues to be very strong, but again, the consumer confidence on gasoline demand, and the first quarter is going to be very choppy when you look at same-store sales because East and Northeast, and even in the Midwest, there's so many days where we had heavy snow and a lot of weather. Had some of that last year as well, but it's hard to really predict what the sales really were because we had so much choppiness in the weather. So I think the second quarter here and the third quarter is really going to tell the story, but I would expect gasoline demand to pick up as we go into the summer.
You also have a pipeline component of your business. Just a broad question. The Keystone pipeline, of course, has been delayed for years now. Is it still needed?
I believe it is. If you look at the Gulf Coast refineries, you have the Texas refining corridor and you have the Louisiana refining corridor. The Texas corridor, where Keystone would serve, is going to bring heavy crude from Canada, as well as could pick up some light sweet crudes and from the Cushing as it comes down into this marketplace. And we're already getting some of those light sweet crudes because of the two lines that have been, one's been reversed and a twin line put in place out of Cushing down into the Houston market. So I take you over to the Louisiana corridor. We do not have the pipelines to really run north to south to get those crudes either from the Bakken, light sweet crude, or the heavies from Canada. I think both markets are needed. And if you step back and look at the demand in the U.S., we estimate we're going to run 16.5, 17 million barrels per day of crude this summer. We're still importing half the crude that we need to be able to service the demand in the country and also the demand for the export volumes I talked about earlier. So yes, I think the pipeline to come in, the Keystone to come into Texas, and I believe eventually being able to service the Louisiana refining corridor. I think both of those are going to be needed long term.
Gary Heminger, we'll end it there. Thank you so much.
Thanks for having me, Rhonda.